She just, as we all know, credit card debt is at its highest in, God knows how long. And she's just drowning. And her credit score is just too low to get a home equity line of credit. Going from a conventional loan, 3%, sub 3%, now looking at, 6.375 FHA loan to consolidate her debt. And it's also to take off a parent. A lot of people are looking right now to refinance because they promised their cosigner that, hey, yeah, in 1 year I'm going to take you off. So I'm sure a lot of people have gotten those calls. Hey, can I just get this cosigner off?
No,
Like,
I didn't
no.
even think about that. You're so right. A lot of people that were struggling to qualify and certain income, hey, I'll only co-sign for 6 months and I'll refi you out. Co-sign for a year, I'll get you out. Wait for the seasoning. I didn't even think about that whole component of a market extraction. And I'm not sure how you advise people to go target these, but I think the reality is if you can't refinance, you're going to have to sell, right? So for any realtors that are watching this and you did deals where parents or siblings or whoever co-signed, maybe you go back to those people and like say what's up. Maybe you create a mortgage referral for your mortgage partner, or you can get a listing out of it.
It's so true. I get a lot of calls like that, and most of people are not refinancing, but they're going to be tempted at some point in time. Like, how long can you really wait by that family member pestering and pestering and pestering you? I need to get off. I need to get off. I need to get off. So yeah, I think that's a great point.
Hi.
Yo, you up? Who wants to go next? Josh? Gabe?
Are you talking to me, Jeff? Or
Yeah, Joe Marin. Go ahead. Say hello.
what's up, everybody? Yeah, so I do a lot of New York City, Jersey, and Florida business, and most of the business that we do is purchase business, and we're seeing a lot of people, especially in the boroughs in New York, looking to get into multifamilies with the high rate environment. The people that we deal with are using the projected rental income to help qualify for an agency loan. A lot of I mean, we get everything, refinance, purchases, but I've never been busier. So if there are people out there that are struggling to get business right now, I've never been busier, and I think there's a ton of business out there still. And yeah.
Josh? Anybody else? Gabe?
I can go.
Go ahead. Oh, Morgan, I didn't even
Yeah.
see you hopped on. You're usually fashionably not showing up, so I'm happy
No,
you're
I
here,
made
dude.
it. I made it.
You
Hey
look
guys,
good, dude. I like the haircut.
I'm trying. It's a new year, new me. Um, but yeah, so I'm Greg Morga. I run a mortgage branch with Annie Mac. I do mostly in New Jersey. I'm licensed all over though, and if we're talking about market conditions, I mean, I've definitely seen a lot of haves and have-nots. Very, very bipolar right now. I have borrowers that they have 820 FICO scores, hundreds of thousands in the bank. They don't have anything to sell and they're putting 40% down. Or I have people with nothing, 535 FICO scores, no money in the bank, minimum down, and tons of ghost payments. I don't know. I think that's what you call the term. It's when they have like a liability that doesn't show up
Yep.
on credit, but they have like a
Yep.
personal loan through like Prosper for 30,000, 50,000,
Yep.
and it comes up on title later. The concerning thing that I'm seeing down here is that we kind of have a mixture of 2022 and 2016. 2022, meaning that it's bidding wars again. There's barely any inventory. Homes are going 30,000, 40,000 over ask price still, waiving appraisal, waiving everything. But you also have 2016, where I have a lot of buyers that, maybe 2 years ago, a year ago, they had perfect credit, they had money in the bank, and now they don't. Now they don't have the credit. Now they've missed their mortgage payments. Now they're in pre foreclosure, right? Their jobs have gone down. They don't have the same salaries. And they don't have enough. Some of them want to sell their homes that they bought with me 2, 3 years ago. They don't have enough equity as much as they thought. They want to get the rate down. Rates haven't really moved. So I'm starting to see like something's got to give. I just don't know what that is. It's pretty
Greg,
much
are
what I
you
got.
seeing a lot of people just happy to be able to get approved for a mortgage to buy a property to refinance, or are people really,
No,
really still rate focused?
I've never. I mean, knock on wood. I mean, I've never been in a situation where I
Chris,
got rate shopped a lot.
can you bring me my notebook, my pink notebook, please?
If I got like a prime borrower that's, 50-40% down, I mean, I'm able to go super low. So I don't usually have those concerns, but generally people are just happy to get money right now, I guess is
Mhm.
the question they're asking. They're more focused on how much they're spending out of pocket and how much they're going to save versus what they're actually spending per month, which is, honestly, for a lot of them, the reasons why they're in the predicament that they're in. They're not focused on, I'm not saying rate is everything, but you also shouldn't be over leveraging yourself. And I just think people are still in this mode that eventually it's going to turn back to 2020 and not realizing that like 2020 was the exception to the rule. It's not reality, and this is reality. And they're kind of just trying to get behind the eight ball and keep going and push out the inevitable, thinking that it's going to come back and everything's going to be saved. And you have to kind of bring them back to reality. And some people don't want to hear that, and some people do.
Interesting. Ben Jonas, I want you to share what's going on the non-QM and ground up construction and fix and flip side is who's trying to borrow money, what hurdles are people running into, what solutions are you providing? Give a little bit of insight into the alternative credit markets.
Guys, Ben Jonas here. So, yeah, I mean, on our side, primarily, I'm seeing a lot more activity, surprisingly. Um, the portion of it, I think that's a bit taking me aback is seeing investors that they've been sitting out for a while since 2020, and market kind of went crazy, and a lot of guys were sitting on dry powder, for lack of a better expression, waiting for a crash to happen. Crash never took place. So now they have bills, they have obligations, they got to work, and they got to keep their crews busy. So now they're getting into projects that, frankly, I don't think they should be doing. I just funded one recently where, the guy bought a house in Paramus, and appraisal came in almost 100 grand less than he's paying for the property, putting $1 million worth of work into it, and he's telling me it's going to sell for 3 million, and the ARV appraisal comes in at 2.2. He literally had to put down almost 60% down payment to purchase this property. And he swears up and down he's going to be able to sell it, he's going to make the money, and so on and so forth. So I'm seeing a lot of that. Investors are just overconfident. They're thinking things will keep going up, going up, going up. They'll be fine. They'll be fine. They'll be fine. So in that sense, it's happening. The other side of it, or guys who are caught between a rock and a hard place, and they have to make that decision to get out because maybe they were overly optimistic about the market. Again, things will continue being great. They'll make money. Things will be fine. I think I shared the story earlier in the group chat we have where I'm doing a deal in Gainesville where this guy owns a big, beautiful house, 15,000 square feet, $4.5 million, and he got terrible, financial habits. And now he's stuck trying to refinance out of a $850,000 loan where he's paying 28%. So a lot of that is because I'm seeing a lot more of those trends. But on the other side of it as well, I'm seeing investors coming to, accept the fact that rates are not coming back down to the 3-4% range. So they're coming back to me. They're coming back to the market to buy rentals. They're buying, refinancing out, pulling cash out to buy more properties, and accepting the fact that, values are where they are right now. They're not going to go down anytime soon. So, we got to keep working. So in that sense, I think it's good for us, in that space where, business is good and more lenders are coming into the private credit space. We're seeing more the bigger shops moving away from equity type plays to wanting the cash flow. So in the foreseeable future, at least for the next, I'd say 2 to 3 years, I think things are going to look more like this.
Interesting. Gabe, your turn, buddy.
Yo, what's up, guys? I'm seeing so right now on my end, I'm fortunate enough to be getting a lot of A paper deals, a lot of easy, but what comes with A paper, your clients are a little bit more difficult, a little bit more savvy, so a lot more rate conscious, fee focused. I'm not really seeing too much of any difficulties qualifying just because of the type of borrowers that I'm getting right now.
And would you attribute that to having a cleaner referral source or demographics or areas, or what are you seeing? What would you attribute that to? Because I remember probably a year ago or 18 months ago, you said you were struggling just to get people qualified. Like they all wanted to buy, had the desire to buy, but a lot of people like had either credit issues or down payment issues or, wanted to buy a house for way more than what on paper they actually could get approved for.
Same referral sources. I guess, could just be the timing. I wish I had an answer to that one. I've been trying to figure it out either. I've been trying to figure that one out, but don't really have an answer for it.
Got it. Who else is on here that wants to share? Anybody want, even realtors? I mean, Andrew Berman, anybody else on here,
I'll
feel free to take
I'll
yourself on.
jump in.
Jeff,
I'll jump
Jeff,
in,
one
Jeff.
thing,
Go
Jeff,
ahead.
one thing.
There you go.
I'm sorry.
Go ahead, Joe.
So
Joe, you got,
One thing I'm
yeah,
Vinny,
finding,
Jeff, go.
your cousin can't hold his thoughts. So let's get
Joe,
your
go,
cousin.
go, go.
Go
one
ahead.
thing, one thing I find interesting, doing a lot of business in the boroughs in New York, it's kind of crazy how Brooklyn and Queens are completely two different animals at this point in the market. Like in Brooklyn right now, you don't really see tons of bidding wars, and the borrowers, for the most part, because I'm doing Zillow campaigns all over the city, and we're working with Zillow leads, and in Brooklyn, there's not a lot of bidding wars, and the borrowers, for the most part, say if we get 10 leads in for the day, 2 out of 10 will qualify. The rest, they just, they're not qualifying from a ratio standpoint, and they're not qualifying from a FICO standpoint in Brooklyn. But it's kind of interesting because in Queens, in some of the areas that we're targeting in Queens, it's the complete opposite. Queens, you're seeing bidding wars, open houses where there are 15 to 20 buyers going to the properties, and the borrowers are qualifying a lot easier. It's just in this market, I feel like it's really the location is the most important thing right now.
What would you attribute that to? You think Brooklyn ran up too much in pricing or it doesn't pencil out and Queens is an additional opportunity, or maybe because you're getting a Long Island buyer there? Like what would you believe those trends are based on?
I'm not really sure because we don't have enough data and we haven't been doing it long enough to figure that out. But honest, that's just what the numbers are looking like. I mean, I just think that the areas in Queens are just more attractive right now than Brooklyn.
Interesting. And our price points relatively the same, like two family 1.3 in both areas. Are you seeing
Well, that's the thing too. In Queens, say you have a 3/3, same square footage, same condition house, two family. In Queens, you can get something somewhere in the mid eights. Brooklyn, you're going to be somewhere in the high nines.
so
So
there's a big price point difference?
I think that's what it comes down to.
Interesting. Vinny, what do you got, babe?
Yeah, I'll touch base on, what I see from the residential side and what we're dealing with, but I attribute the success that me and Joe have currently and that we're still able to get a lot of business in this market. Knowledge is a huge factor here. If you're not prepared and you don't understand the nuances of structuring deals that offer different benefits to the borrower to meet their goals. A big part of it right now that I see, like, we all come from 2020 is just a couple of years ago where the rate didn't fucking matter because everybody was getting in the twos or threes. The payments are super cheap to now we have buyers that, normally not even savvy buyers. You're talking, four co-borrowers on a two-family purchase in Brooklyn to make it all work together. Whereas we used to not be as conscious with what the rate is, and now they're super conscious what the rate is. And a lot of it has to do with the fact that, for example, we pre-approved the borrower 4 years ago, got them on their first purchase. Their credit score was a 760 and their debt was paid. Now that same borrower, they're maxed to the gills on their credit. They're worried about their minimum payments. They're worried about the debt that they incurred. Everybody is in the same boat. I have borrowers that went from 760 FICOs to, we just ran their credit and it's a 620. And it's not that they're missing payments, it's that they do not have any means to pay their credit card debt. So they're being more conscious in the transaction in its entirety. Uh, big big deal right now is getting that cash to close as low as possible in the residential space. Even savvy buyers that normally would put down 20% are now trying to leverage more and look for ways to put less of a down payment and to keep the cash in their pockets. Cash is king from every aspect that I've been, dealing with, and every borrower right now. They're trying to stay as liquid as possible. So even if that means on a residential transaction, leveraging another 5% so they could keep another 20, 30,000 in their pocket, that's been a big goal of theirs. And obviously it changes, but a lot of our business is first time home buyers. A lot of our business is, two, three, four borrowers on a deal to get a house. They do want to buy. Everybody wants to buy still. It's still the goal, but they're not jumping off the fence as quickly as they were because they're worried about cash. Money is hard for them to make right now, and the bills keep piling up, and everything is more expensive. So, where we've been strategizing is using a lot of low down payment, private mortgage insurance to keep the MI down. Also, borrower preparation, like having real honest conversations with them in a market where deals are, far and few between, for a lot of these guys who are on their way out. They're trying to make a killing on one deal where volume is the key, offering real good deals to people. That helps us keep the transactions up and the referrals, but coming up with different solutions to keep the money in their pocket. I hate, the buy down options. I don't ever pitch them. I think they're stupid. A lot of things that we're coming in now, a lot of people are looking for HELOCs. I've had, never in my career have I had more than one person a month reach out to me for a HELOC, and now I get a call for one every single day. I don't like doing them, so I refer them out, but doesn't necessarily mean sense. I had a guy call me yesterday. He has a house, worth 700,000, only owes 180 grand. He wanted to do a HELOC for 200,000 to end an extension. I sold him and convinced him that it's a better option for a blended rate to just take a full refinance and have the full tax liability on a primary, mortgage. And he agreed. Payment wound up being the same exact thing, split between two loans, but now he has one mortgage. And I was able to, explain why it's beneficial to him. The knowledge is really, really going to be key here in keeping deals in, everybody shopping. I've never had more people, actively shopping multiple lenders at the same time. So that's, a lot of the stuff that we're dealing with on our side.
Yeah, and
Interesting.
we're dealing with Chase taking all our trigger leads.
Trigger leads, every deal right now, I have to sell the borrower multiple times a week. I haven't been on that side like in the market where we have to actively sell and sell and sell since I was banging phones and taking lead calls from 9 in the morning to 9 at night. Never on referral business has it ever been so skinny and competitive still, and it's not like the referral sources aren't solid. Our guys are feeding us and giving us the at bats. But if you try to come in over the top and you try to come in too expensive, they're not even going to take you serious. So right now you have to give good, honest, business to these people and you have to sell them every single step of the way. It's like lead-based business that I was doing back in 2013.
It's kind of crazy, Jeff, because and everybody. Yesterday, I had a lead call me. We took the application, we ran credit. 45 minutes later, they sent me a voice text message of Chase calling and reaching out, basically saying, "Oh, I see that you had your credit ran for a mortgage application. Um, we're offering up to $7,500 towards your down payment and closing costs. Special program that Chase has." Literally 45 minutes after I took the application and ran credit. So in this market, we have to stay on top of every single lead that comes in, whether it's through like automated emails, text messages. Whenever there's an update, stay in contact with them because they'll just go somewhere else.
You got to give them 100% of your effort. You got to touch your leads every single day. Like right now, me and Joe have, I don't know, 15 or 16 active residential loans for the month, just between the both of us. We have to reach out to every single one of these borrowers every single day, whether it's our team, our processor, junior, however we structure it up. But if you're not consistently talking to these people, they're talking to somebody else. You need to stay in their face and let them know that you're there. It's one of the things that every single deal is, dealing with right now. And as you guys know, holidays or whatever, killers. They sit down with their uncle and, oh, he bought a house 30 years ago. That rate is too high, a lot of that stuff. And the uncle from 30 years ago that bought one house doesn't understand the lending landscape of today, doesn't understand what everybody's dealing with, the market volatility, the constant change of guidelines and products. And, I think that's one of the things that separates, a lot of the people that, Jeff deals with is the knowledge behind it. If you don't understand every single product, you don't know everything that you could bring to the table, you're going to lose deals 100%.
Andrew Berman, I'd like to hear what you're hearing on the street. For those of you that don't know Andrew Berman is God. I mean, a good guy in the business. Family was very well involved with National Mortgage Professional magazine. I believe that Joe Marin, I got you featured in that. Greg, I think you and Andrew had some talks. Andrew's been a dear friend of mine for 15 years now, if not longer. I can't believe how old I am. He still looks the same. I look a little bit of a receding hairline, probably never because of him, but maybe indirectly. So, Andrew, why don't you share with everybody what's the word on the street from all of the big mortgage lenders and also the alternative financing guys? What's sentiment? What are you hearing as far as new products go? Give everyone a little bit of a inside track.
I mean, obviously, I'm talking to the lenders. Everyone's focusing on, okay, DSCR product, and coming up with product innovation, like the new thing that I'm sure you guys have seen, a lot of HELOC DSCRs. So, but I'm curious, like, so when you're getting those trigger lead competitive calls. So you mentioned Chase. Who else is coming actually to the table, with offers? Are they giving like significantly better deals with a huge delta? Like what's and how are you selling them to get them to say, hey, listen, ignore those calls?
I mean, we just pitch service. I mean,
Yeah, on our side, it really comes with, accessibility, right? Like a Chase loan officer doesn't even answer or call you back until 11 o'clock in the morning, and then they're out of their office by 3. So a lot of them weed themselves out unless you have a guy or a girl, borrower that is so conscious about the rate and the difference of $100 in a payment that it literally will keep them up at night if they choose a different lender over that deal, then it's not a hard sell because my borrowers call me at 10 o'clock on a Friday night and I answer. If they need help with something, we answer. Like we try to be as active as possible and as accessible as possible so that they don't even think about calling somebody else. So when we're dealing with trigger leads, in the beginning, it becomes a conversation. And then, you have to have the conversation with them, and be honest. Listen, you could go to any single bank in this country and bring my deal, and they're going to undercut me by $100. And there'll be a guy that's willing to do this deal for $0 because he has no business anyway. Whereas I explained to them, not going to be the cheapest on the block, but one, I'll get your deal cleared before everybody else will. I'm completely accessible. You'll be able to call us. We have a full team that's, serviceable. And, we let our experience with the borrower speak for itself, essentially. We don't lose a ton of deals, but it becomes a sales thing. Like I said, it reminds me back when I was banging phones from 9 in the morning to 9 at night, taking lead-based business. That lead is going to be touched by 10 different people. And what brings you to the front of the line over the rest when, maybe your margin is a little higher, maybe your cost to get that lead was a little more expensive. So you can offer them the 6.875 as opposed to the 7%. Not that you're trying to beat them over the head, but there's an acquisition cost. So explaining all that to them, explaining, the way the market works. And, sometimes I find myself getting into deeper conversations about things that don't even have to do with the deal, but explaining the landscape to the borrower so that they understand. If they're going to be stressing over an eighth of a point in rate, then maybe we're not the best to do business together anyway. And maybe you should go somewhere else so we don't waste time with each other. A lot of honesty in the front is, what gets the deal done for us, and not wasting time. I know you're big on that, Jeff, too. I was on a call with Jeff the other day. We just closed a $2 million purchase. I got cleared to close in 14 days on the residential side. The guy needed to close in order to keep the deal. We got it done, super fast. We jump on a call because the guy wants to build a $4 million house. And the guy goes, yeah, well, send us your bid and we'll do our best. And Jeff goes to the guy, well, this is an eBay. You're either going to do business with us or you're not. And we're not going to stress about that minor differences because again, if you go bring our deal to every other bank, there's going to be a bank that has a better deal just to undershoot and because they need it. So getting that out of the way in the beginning and letting them know that, we're not going to play the game back and forth either. Like you need to be stern with these people as well.
And I think, and you make a great point. I hope everyone feel free to steal that eBay. Listen, if you want a bid, go to fucking eBay. If you want an actual person and professional to do your deal, come to us. I think everyone should have that mindset. If you don't come from a place of lack or desperation or need, and you know your worth, shut that down and say, listen, you're going to provide favorable competitive terms, but if you want full direct access to me 24/7, there's a cost that comes with that.
Yep.
I think everyone should also realize like this is a past client. So one thing that I've always done for those of you, I think I've probably closed a deal with most of the people on this call at some point to some capacity over the past 17 or 18 years now, is whenever I get in front of someone, I always try and refer them to my attorney, to a title company, to a realtor friend, to an investment advisor, to anybody else that I know that they could use their services. Because what I've found is if you insulate your client, I hate the word lead, if you insulate your client inside of your circle and you refer them to other people inside of your circle, that other circle is now keeping them inside of your den, right? If you just have this conversation, give a pre-approval, and they go out into the wild, another realtor is going to try and refer them to their mortgage person. The financial advisor is probably going to try and do their loan on their own. If they get some jackrabbit attorney, the attorney's got a mortgage person, right? So by giving them, I call it your fantasy football roster concept of all the professionals that they're going to need, those people are then supposed to be the bumpers to bring them back to you, like in bowling. So I hope that makes sense to everybody because that's the reality of the market. You want to get
Yeah.
your people that are in front of you inside of your net, inside of your ecosystem, and never let them out. And some people you want to open the door for and kindly tell them to get out. But the
And
majority of
Jeff,
people that are real, you want to do that for.
and you're super right with that, Jeff. Like, I find the transactions where we're working with all the people that we're confident in to always be better and smoother. And what I've been doing also to help on like our side, if I want them to use my attorney or I want them to use a realtor I do business with, I offer them a credit from the branch to keep it all in the house. Because honestly, if I have to credit $1,500 to offset, an additional attorney fee or something like that, to make my life less stressful, I'm happy to do that. Like, I'm
Worth
not
it
a
every step of the way.
and it is. I'm sure you all have nightmare stories with real estate attorneys. I mean, how many times do I have to deal with a guy who's been an attorney for 40 years and
Mhm.
has not changed with the times? They
Oh
think they
man.
know what mortgage lending is when they have no fucking idea what mortgage lending is in 2025. And you're consistently battling an attorney who's stuck in 40 years ago and trying to explain to them the differences in the kind of deal. To me, attorneys are fucking deal killers, and I hate dealing with them more than anything. But if you could control the transaction and get an attorney that you're cool with on the other side, it makes your life that much easier on the lending side.
Ladies, let's hear from the ladies. I don't know why this is such a male-dominated industry, but we're not about that. So, who's Jamie? I'm going to put you on the spot, Jamie. I want you to hop on here and share with everybody what you have going on down in Florida, and also, what you're seeing from the buyer pool and seller mentality. And then hopefully, I think you've done business with some of my guys on the call here, but hopefully, whoever you haven't done business with, you'll get opportunity to.
Yeah, I've reached out to some of you guys. Hi. Florida is Florida. I have a lot of people that, because I was doing property management first, a lot of my tenants from a few years ago, like they're getting ready to buy, so I have them coming in. I have a lot of investors who are trying to get rid of the investment properties that they had bought during the pandemic for too much money, and now they're trying to sell them and possibly make a profit, which isn't the most fun either. But I mean, I don't do a lot of traditional real estate. I do mostly like off market. So I'll go on PropStream, and if I have an investor that's looking for a certain property, I'll research the property, reach out to the owner and try to make that relationship. The other thing that I do with a lot of my buyers is I'll give them like a preferred sheet. And of course, Jeff, you're on it as far as lending goes. Just to let them know, like, this is who I work with, and this is who, if you have any questions about anything, this is who you reach out to. But that's really all I have to report in Florida.
Well, take anyone down in Florida, refer Jamie your clients if you have it. Sarah, Cindy, what are you seeing on the insurance and the real estate side?
Yeah, I mean, I'll share. I work with, within loan officers and realtors in Virginia, North Carolina, Florida, all over the place. And one thing that we're encouraging our sales producers to educate their loan officer and realtor partners on is getting that insurance looked at the beginning of contract once a contract goes down, because like everything else, insurance premiums are high, and especially depending on like where you are in the marketplace, such as like Florida. It can be really difficult to find a policy, and where insurance used to be something that would save deals for loan officers, we're really mindful of what that rate is because the debt to income ratios are so tight. So getting insurance looked at early on in the process to help mitigate, any delays going forward. And then we're just constantly having our producers staying, just like you guys, staying in contact, with their referral partners to stay top of mind and letting them know that you guys are clawing and fighting for every single deal that you have right now. And when you guys are referring, there's reputational risks. So just making sure we're doing everything we can on our side to make you all look good. Part of what Jeff was saying is like having that team of people to refer to and keep it insulated. We love being a part of that and want to make sure you guys look good.
Sorry, what states are you guys actively servicing right now? I know you guys are adding new states to your arsenal, but what's your bread and butter right now?
I mean, we're all over the place now. I would say Virginia, North Carolina, South Carolina, Georgia, like all Eastern Seaboard, even Florida. We're getting ready to be licensed in New York, which is exciting. New Jersey, Pennsylvania, Michigan, Illinois, Colorado, Utah, Arizona. We're not in Texas. We're not in California. We're not in Alabama. So, yeah.
Awesome.
Definitely growing.
Sydney, Natalie?
I was going to say I am in full agreement with like having a circle and a network of people and keeping your clients with those people, because I hate when people don't do their job and don't answer my call. So the best that I want to control that they stay with my mortgage broker, with my title company. So I think pour into your agents too, to make sure that they're directing their clients back to you. If they come to you with concerns about numbers or say that they called someone else, listen to them and ask why and reassure them that you have your connections for a reason. I do that a lot. I go to bat for my contacts a lot, but for a reason, because I know that they're going to serve me and my client well. And then in regard to buyers, I don't feel like I have people who are really struggling to get qualified, but I feel like everything's in a gridlock. Like I feel like every number is a fight, every conversation is a fight. We have sellers who are overpricing everything and not willing to move, and then buyers who think they know everything and really want a certain price, and then it becomes a battle of commissions. And I feel like every step of the way is another argument about numbers. So people are qualified, and I deal with a lot of relocation, so people are still moving, but I feel like it's on this side a fight at every step too.
I would agree with that. Natalie?
Hello, everybody. Thanks for having me. This has been such a wonderful session. I especially love the emphasis on the referral within the group to keep the business kind of central and circular. And especially thanks to Vinny for inviting me. I'm a newish agent in the market in New York City. I'm at Compass. Not a lot to report. I just finished my first month at Compass.
Congratulations.
Thank you so much. So I don't exactly have a lot of business going on right now. So some buyer referrals would really be what would be most beneficial for me at this point. I'm covering both Brooklyn and Manhattan.
Beautiful. Love it. Carmen, what's up, man? How you been?
Hey, what's going on, Jeff?
Been a minute.
Everything's been going well. Been doing a lot of things been going on. Hey guys, everyone here. My name is Carmen Cipollone, originally from Jersey. Moved out to San Diego. I lived in San Diego since 2008. And I'm a mortgage broker. One of my things I do, I have a 10-state footprint, but now I'm based out of Florida. I moved to my Airbnb down in Cocoa Beach area, if anybody knows where that is, and been out here for about 5 months. So a lot of different moving parts. Got to get off of, with all the relationships that you built over on the West Coast. Now you got to try to implement that into the East Coast. A lot of hands, a lot of handshaking and baby kissing again, but it's all about that grind, and it's fun being out here in the land of freedom compared to where I was, and I just appreciate the new adventure and the new challenges. But I see with everybody's same situation with what we're seeing out here, insurance, obviously Florida is just getting crushed. So a lot of the borrowers that were being approved and qualified the last couple of years since the insurances have gone up, they've been knocked out of the market. And I haven't seen a lot of the investors. They're obviously going in and out, but if the payments aren't going to make sense for the break even for how much it's going to cost compared to what they're going to get for rents, it's getting pretty tough for them to make ends meet on that. I'm glad that there are some no ratio products out there for investors that they want to just hope for the best and hope that the value goes up and not getting any, cash in hand, which is the goal for me anyway, for my investments. I want money now. Obviously, we want to hope for the best in 3, 4, 5 years, the values will go up. Wherever you are in the country, right? California, 50% of the value compared to Jersey. I have an Airbnb over there or a duplex over there in Jersey, which I mean, I bought that was my first investment in '05, and I mean, the value's going up, what, 50 grand? Whereas California, I got property there and that investment shot up ridiculous tenfold. So, it's a working machine over here, but that's basically what I'm doing is trying to figure out ways to help more clients.
Love it. Love it. Big Al, what's up, my brother? Where you been? You still in New York, Connecticut, sitting on the border right now, or where are you actually? What state?
Yeah, I'm in Connecticut. Well, I live in Connecticut in New Fairfield, but the office is still in Morris Park.
Love it.
We're actually doing pretty good. The rental market is pretty strong, and that has really sustained us, to be honest with you, throughout this whole period.
Did you
But
find because obviously when you and I met, I think it was over probably 15 years ago at this point, somewhere around there. I was
it
a kid, I
has.
was a baby, I was just still learning how to walk.
I
Do
was
you
dealing with
find,
your dad.
yeah, do you find that when you added Connecticut to your arsenal, your business really expanded?
Well, I added Connecticut more necessity, right?
Yeah.
Because I moved to Connecticut and
Yep.
the drive
Yep.
is pretty crazy. But
Sure.
once you're actually over here, the drive is as crazy, to be honest with you. Everywhere I go, it is either 30 minutes away or an hour away.
Traffic,
So,
road work.
well, thank God that's the key, though. There's no traffic out here.
Right. Right.
I just got to worry about, from storms here and there, trees falling and whatnot. But other than that, it's actually pretty clear. It's a lot, we realtors got more control here or had to learn, reading the contracts. There's more liabilities for us realtors out here in
Whole
Connecticut.
different ball game, Connecticut
A
versus New
whole
York.
different ball game. Yeah, yeah. But it kind of helped out, being married to an attorney. So it worked out on that end.
Yeah, talk to me in 3 years. Let me know how that's going. All right.
Well, we've been married right now, man, for
A
we're
while.
going for 15 right now.
Yeah,
So
yeah,
it's
yeah. But
pretty
listen,
good,
the next 3 years, man, she's gonna, have you sleeping on the
Hey,
couch.
she
You know
can
what
have
I
everything,
mean?
man.
Putting your
I'm
underwear
okay with
away.
it. You know what they say, right? And happy wife, happy marriage,
I
So
hear you. I hear you
yeah.
guys.
Salty much, Chef? Salty much?
Yeah. Who else wants to hop on and share something? Anything that anybody hasn't shared or wants to know? Danny, you got anything to add? I know we had a great, phenomenal meeting with your very amazing clients from Idaho on Monday.
Yeah,
Again,
that was
anyone
a,
else
that
that
was a
wants to
good one.
hop in or
Class
share?
was in session for them, Jeff. They were super impressed. We did a 5-hour meeting with these gentlemen out in Ohio. They own part of a ski mountain. They're trying to expand, building 50 condos, motels. That's phase one of 9. Looking for 30 million to start off, and then only upwards from there. So, Jeff took them to school on Monday for 5 hours. Gave them pretty much all of the insight that they could possibly want on the lender side of things, on the broker side of things. Had a couple calls on the spot with some of his connections. So walked away from that meeting myself, always learning something new too. But them, just tons of congratulatory texts, saying they should have met us years ago, all of that good stuff. But keeping the circle as it is, someone mentioned earlier, that referral came from a dude that I've known for 20 years. He only got into real estate about a year and a half ago, 2 years ago. And then, we had a couple calls with Jeff, super impressed, and started bringing us the big money guys. So keeping that circle small on, the broker side of things, it's a small world, but a big world. And, looking forward to getting that one going sooner than later. And then on the residential side of stuff here, mostly doing the work out on Long Island. The inventory is a little, it is what it is right now, but first time home buyers are always still looking to buy. So we're just trying to do the best we can for everybody with the knowledge, with the relationships. Our team is a family run team. So they're talking to husband, wife, me, and brother.
Got it. I know
taking
Andrew
really
put
good
a
care of our
question.
clients.
Yeah,
Yeah.
Andrew put a question in there. You guys answered that, but real quick, Josh, I want you to take yourself off speaker, and I want for you, and obviously I know you're going to speak from the heart. I want you to share really what attracted you to Zoom at Noon when we kicked off, gosh, I think 4 years ago at this point, maybe 3 years ago, maybe it was definitely 2022, but I think it was the end of 2021. Not only what attracted you to it, but also the growth that you've personally and professionally experienced, on our journey, both together and individually, and what keeps you invested, what keeps you involved, and, what do you think about the trajectory of everything that we have going on?
Yeah. So what attracted me to Zoom at Noon first was I had been in the industry at that point for 10 years. But I still hadn't created a lot of those relationships and connections. A lot of it was just transactional. And that's just what the industry was. That's what I grew up in. And I was really striving for a more relationship-based connection within the industry, not necessarily from me to clients, but from me to other people, other professionals like yourself, Jeff. So when I came across it just by chance, I said, why not? Let me jump in here. And just from that first Zoom at Noon that we had, like you said, 4 years ago, I've been learning ever since, and learning from people like you, but not just people like you. You've created, we talked a lot about a circle, right? You've created a circle of people around you that come from all facets of the industry, and that's really what keeps me coming back. I mean, I knew nothing about non-QM, creative financing, commercial financing, ground up construct. I knew nothing about that, literally zero. It was all residential, 1 through 4 unit multi, it was that's all my career was. But whenever I started joining these Zoom and Noon calls, and you and I sort of would connect, off of those calls, just so I could pick your brain and you could share that information with me. It's opened up a whole new world for me. I've been exposed. I've been lucky enough to be included on multiple meetings and calls that you've included me on, introducing me to people that, that's their entire life. And it's really opened my eyes, and send, and not just me personally growing in my career, but just what the opportunity is out there for our industry. I hear, obviously a lot of people on this call, we're talking a lot about residential loans, but my question that really pops up in my head is, where's the opportunities outside of that? Right. Because I really think, and, having been around the people that are in that side of the business, people are more busy now than ever. Right. People that are in that space. But then you see, right, you jump on LinkedIn, or you hear feedback from other people, and they say they can't find deals anywhere. So that just tells me that people aren't getting as creative as they need to be. And joining meetings like this around people like this, it's really helped me open my eyes and really broaden my horizons to understand that, like, there's opportunities literally everywhere, right? The building down the street, the house next door to you, there's endless opportunities. You just have to go find them. So
Love it, love it, love it, love it, man. I'm proud of you. I think
yeah,
you
I
are the
appreciate
ultimate
that.
success story from Zoom at Noon. Like, you are Zoom at Noon in my eyes, and I wouldn't have it any other way. If everyone can answer Andrew Berman's question, I want to hear your perspective from everybody on how to handle competition calls. I'm going to shut up on this one because I'll probably be banned from YouTube when I post this video. Too much foul language. So I'm going to let you gentlemen and ladies handle that.
I can speak. I have a couple things because I've been dealing with it a lot. I think the first part is, I think it's very actually easy to prevent trigger leads, just knowing how they use how they come about. If you use the opt out, the opt out clause, that's it's in our app and at my company. It usually it lets them fill it out and not get any calls electronically for 5 years. It actually does work. You just have to wait like 3 or 4 business days. So usually what I do is I pull soft credit, because you can still run all underwriting findings with LP. You can't with DU, but you can with LP. So I can see if I can get an appraisal waiver, income waiver. I usually go Freddie anyway, but that prevents it. Then I usually pull hard credit a week later, or sometimes, depending on how clean the file is, I won't even pull the hard credit till they put an offer in, because the soft credit pretty much shows you 99.9% of what a hard credit does in my perspective. You just got to make sure you run all 3 bureaus. However, let's say that you have a competition call in general. I mean, I think this has a lot to do with, Loan Links and what Loan Links is looking to do. I think you got to adapt. I think no matter how much we want to sell service, trust me, I use that all the time, answering your phone all the time, having, a little bit more talent than those that go lower. There's going to be a lot of borrowers out there that are just pretty much going to be using AI in the future for their loans because they're so clean. I mean, I have a 40% down borrower that has an income waiver and an appraisal waiver and an 810 FICO score. And it'll literally take me 3 minutes to do that loan. And then I have other loans that are FHA, self-employed. They have a bankruptcy. You have to figure out everything with their collections, and it takes a lot more time. And it's or unique situations like divorce, buyouts. You name it. I'm sure I could go down the list forever, but I think it's a volume play. I think coming from a branch manager, like I run a branch, you got to kind of have your set blend on what you want to make overall on average on every single loan from a branch perspective. So how we look at it here is we try to make 260, 2.60 on average on every single loan. Loan amounts have gone up significantly over the last 3 years. So 2.6% maybe 5 years ago wouldn't seem that healthy, but now it is. Our average loan size used to be 240. Our average loan size now is 491. So 2.6 average blend margin on that's great. So how do you get there? I have some loans where I'll go super, super, super light, not having to be at a brokerage just because we have the volume to afford it. And then when we have the harder loan, I base on my margin what the time it's going to take me to do the loan. If I got a loan that's going to take me 10 minutes to do because anybody could do it, I don't need to make 3% on that loan. And I know that there's going to be somebody else that's going to get it, whether they shop me right away or they shop me later. But if I have a loan that's going to be complicated that I know that I got to use more skill sets and take more time to do it, I'm willing to walk away from that deal if they're going to shop me after the fact. But honestly, building rapport and building that trust, like Fiore said before, they tend to not. They tend to want to stick with you because they feel safe with you. So I think having a plan and looking at it from a volume perspective, I think the days of making 3.5% on every single loan as much as we want to, right, in the residential normal space, right, I just don't think that's going to be possible, especially with AI getting better. You're starting, they're now talking about waiving appraisals up to 10% down now. I don't know if you guys know that, but now conventional loans, you're going to be able to get appraisal waivers at 10% down, 15% down. They're trying to get it more automated and use more data. They're coming for our pockets. And if we don't adapt and use that AI to make more closings be available and start focusing on, hey, maybe if you closed 4 deals a month, you got to close 8 in the next 5 years. You're going to have to adapt, and there's going to be loans that you got to make less on. But if you have the volume and you build your business the right way, you could still pay yourself the same and just have the P&L guide you so that you could be more profitable.
Right. You and I have an interesting story, just so everyone knows kind of our background and context. Share them a little bit about, how we met, when we met, and how we've evolved our relationship, over the past 4 years, 3 years.
Yeah. So, funny story. I saw Jeff post on Facebook, and he had this quiz about he had to figure out how he did the loan. And I saw it, and it was really interesting. And I thought it had something to do with Bitcoin. I don't remember the exact thing, Jeff. You probably do. So I just messaged him, and I was completely wrong with my answer. And I had just been following him for a while and just seeing all these different scenarios he was posting that was so outside of the box that I've seen from anybody else. So, I was young in my career. It was like it was my first year and a half, and it was 2020, 2021. Everybody did well, but I always look in the future. I was like, I want to make this sustainable. Even only doing loans for 2 years, seeing that I closed 60 million, I just didn't think it was sustainable unless I focused on the future. And so I was looking for coaching. So I just messaged Jeff, and we started doing coaching. We set up a plan, and I learned a little bit more about my life than loans with him, which indirectly helped me in the loan space because it made me a little bit more confident, made me realize, what my non-negotiables are, and just started focusing on different perspectives of how to gain business. And, I'm here, 3 years later, and I'm still closing, definitely not hitting 2021. But, you take out 70% of your refis, I'm still closing roughly 40 to 45 million a year. I run a branch, and, I think successful. I'm happy. And most importantly, I have a better relationship with my family, and a lot of it has to do with the conversations I had with Jeff.
Have I ever given you bad advice?
No. I just haven't listened all the time.
You have some of my skill sets. That's why you don't listen. You have to figure it out the hard way, your own way.
Yeah.
Mm-hmm. I appreciate you sharing. I think one commonality about, people that, and you guys know who we talk to on a daily basis on this call, and the ones that we don't. I think the reality of it, everyone is on this call, is because, we either are or are planning on being like the last man standing in the industry. And while all the circus of people that come in and out are going to keep coming in and out, that's just the cycle of the business. When you flush a toilet, the water never just evaporates; it just gets into a different toilet eventually. I think the constant of the value of the people on this call, the willingness to learn, contribute, grow, and realize like there's more out there. And the key is finding all that more together. I think that's what separates, the winners from the losers at this party. And understanding, and hopefully each one of you understands that, part of my mission is to provide all my knowledge and experience to all of you guys and vice versa. So you can go back into your marketplace, your demographics, your home, your social media, and you really spread the truth, right? And spread the mentality and motivation and inspiration because, yeah, there's tons of jackasses out there posting that there's no deals and no opportunities. I mean, we're busier than ever. We're closing more deals than ever. I have a deal working with almost each and every one of you. Gabe and I are about to close the deal. Joe and I are about to close the deal. Vinny and I just closed the deal, right? I mean, this is how this business should be. And the more that we come together and realize like we have to make money together, what more can you ask for? And yeah, you know what? You might not make 100% of zero with me, right? But you will make 50% with me, and we will close deals no one else does. And like your money's there, your money's guaranteed, and we're closing deals that no one else is doing, and we're only going to have more access to more exclusive partnerships and relationships and opportunities. And look, people might not like it. You might want to do it on your own. That works. You might want to come in and out, but we think that we are the flagpole in the ground, and our flag's going to keep flying. And I'm just super grateful to have all you guys on this call and like sharing your experiences, being vulnerable, and really looking at this as a team. Because whether you work for the different company, same company, you never know what the future holds. And the more people buy into one vision, like the further that vision is going to go together. So again, appreciate you guys all hopping on. If does anybody have anything else to add? Any questions? Any ideas? For the next
Jeff,
topic next week? Let's rock
I
and
just
roll.
wanted to say, and I'm sure a lot of people feel the same, but I super appreciate everything that you do for me and all the knowledge and information you brought. It really has helped excel my game and kept me sharp, which is super important right now. Staying on top of your shit, being as sharp as possible for every single call is so important. And the knowledge and what you brought to my end and what I bring to the table for these bars now is amazing. And I appreciate
listen, I appreciate you saying that, but your personal growth that I've watched and seen in the industry, like just I see how sharp you've become like over the last 3 months, or really over the last 6 months, because there is an incubation phase, there is an uneasy phase, there is an unknown phase, right? But I think having that constant trust and communication back and forth is what sharpens people. And I think
Absolutely.
the moment people see something's hard or they don't know it, and you're making 20, 30, $40,000 a month doing residential, and I tell you something's wrong, you're like, you can't tell me that. I'm making 20, 30, 40. I know this. There's got to be another answer out there. And I forget who said this, but it was like all alternative financing or shit deals all lead back to Jeff, right? And it's like, yeah, because I told them the truth up front. They thought there was another answer out there, but you just wasted 3 or 4 months to make your 20 or 30,000.
I actually said that. We were working on a deal, and the borrowers decided they wanted to still shop through another guy, and it wound up back at your desk. And you're like,
right. Yeah, and that was a $12 million.
thing.
What was that? 12 million,
Yep.
15 million, something like that.
Yep.
And then I called you up and told you that this guy can go fucking kick rocks, and it's our deal. You know what I mean? So, that's the value of it too. Is like when you guys bring a deal in, that's the whole part of Loan Links. Is like it's grandfathered with you. Like if and when that deal ever closes, like you're getting a check on it. And I can tell you 100 people that I've proven that to. So again, I just want to thank you guys for hopping on, and hopefully next week we have a much better, bigger session. And in this business, it's quality over quantity. I don't care if two people show up. If there's good talk and discussion, we keep rocking and rolling.
Let's do it, baby. Get to it, fellas and ladies.
Do it. And
hey,
ladies.
thank you for the invitation, man.
Really awesome, guys. Hope to see you all next week, 12 noon.
See you there.
Good seeing everyone. Cheers, guys.
Thanks, Jeff, and everyone.
Bye.